Have you ever wondered what the major differences are between great traders and the rest? It's all in the mind and you're about to find out how. This episode is mainly a listing of characteristics that separate great traders from the rest. But before we get started, don't forget to like and subscribe. It's how you get good karma and good luck in the roaring 20s. Now, let's get to business. 1. Great traders have all been losing traders. Almost all active traders lose money in the long run. As repeatedly stated in previous episodes, this is just the nature of the beast. For within trading, there must always be a majority to supply profits to the minority. It's subconsciously easy to think of the two camps as static, that all winning traders have always been winners and always will be, and that losing traders are doomed to eternal losses and feelings of inferiority.
They're losers. They're just losers.
For that reason, let us begin this episode on an optimistic note, for what all great traders I've ever come to know have in common is that they all started off as losing traders. They all testify to having made every single trading mistake you can think of. The difference is that they had no intention whatsoever of remaining static. Instead, they accepted that they were losers within the realm of trading and made themselves no illusions of anything else. They knew that if they just approached trading in an honest and realistic fashion by profoundly understanding why and how certain mistakes are mistakes, being a losing trader would just be a temporary state. Even now, at their most advanced, the great traders I know are still open to cover knowledge gaps and reprogram themselves to fit the contemporary trading evolution. For just like any other industry, technical trading evolves and changes too. For more on this, please watch the episode The Future Death of Trading, linked to at the end, where I describe how trading will die within 2 decades. Moving on. 2. When great traders work, they work hard. Humankind is programmed to economize on energy, for as cavemen we could not afford to waste our precious vigor on nonsense. For we needed it to run from bears and root around for nuts and berries and shit. These genes surely have stuck with us. Simply put, we're lazy. Not me of course, but... Now, take your lazy genes to the trading scene and you'll quickly find yourself being another mindless herd animal.
We are in a really big hurry.
Sure. What's the plate?
29T.
Number.
For whatever the herd does on the trading arena is typically the easiest, most fun and one-dimensional path of least resistance, the energy saving mode. On the contrary, good trading, just as poker, will cause your brain to sweat. It's an effort that doesn't come easy. Tagging along with the low energy consuming herd on the other hand is easy, pleasant and comfortable, but a guaranteed path to long-term red numbers. This is where great traders differ from the rest. They may not trade or analyze charts for more hours, but when they do, they truly exhaust their brain cells. They push it until they get it right and never settle with whatever information that first meets the eye. Scrutinizing and debunking whatever they see, they tirelessly separate signals from noise and whatever they're ultimately left with are pure naked truths. This directly translates to other areas as well. Over the course of my 10-year-long poker career, whenever I accidentally slipped into playing on autopilot, results immediately suffered.
Why, I'm driving.
Whenever I brought my most focused and high-level game to the table, on the other hand, I would eventually log out of the poker client being exhausted. 3. Great traders focus on the process rather than on the outcome. Bad traders tend to be results-oriented. They don't care how they achieve profits as long as they win. This incentivizes short-term thinking, biases, and a non-progressive mindset. Great traders, on the other hand, care about the process. They know that bad trades at times may lead to profits and that good trades, on the contrary, often lead to losses. For the short run is certainly not fair, but the long run is. And just like a casino manager won't slam their fist at a roulette table when the house loses a big bet, great traders know that as long as they trade with an edge, the results will automatically follow at some point. For trading, like casinos and poker, is a numbers game, and given a proper edge, whomever can count the longest wins. So you'd rather be a parrot than a dragonfly.
And its name was Dragonfly.
4. Great traders know what indicators to use and when. The truly successful traders I know all use technical analysis. I've seen them at work, how they think and how they analyze charts. It's similar to what you know, yet vastly different. Normally when you watch amateurs doing TA, you either see some clown cluttering their charts beyond recognition with a harem of crisscrossed lines and queer reasoning, having no idea what they're doing and rather turning their poor charts into a Jackson Pollock painting. Or they simply draw some support and resistance lines upon which they always buy, sell or short, completely neglecting to understand how the dynamics change for every time a bounce takes place. To put it bluntly, I have met few technicians who truly know what they're doing. But don't get me wrong, top traders still use roughly the same tools and indicators as everybody else. They primarily focus on horizontal support and resistance areas. Yeah, areas. Rarely on lines alone. They focus on triangles, pennants and channels and on trading volumes. Yet their thinking goes deeper. Show a graph to a top trader and they will immediately spot things few or nobody else sees. Things that seem almost invisible to the naked eye. Their thinking is just at another level, for they connect the complex dots in a simple way and they're frighteningly good at distinguishing signals from noise. I guess that's the very definition of an acquired sixth sense.
Yep, there he goes. There he goes.
And of the hundreds of indicators and tools you can use as a trader, they use very few at any given time, but they know exactly which ones to use in what asset and in what specific situation. Sudden market twists and turns make perfect sense to them. It's as if they've merged with the market spirit, as if they can feel something that others cannot. I guess this sixth sense ESP stuff all comes down to routine and analysis. For apparently gut feeling and so-called intuition are proven to be merely deeply stored and thoroughly processed knowledge. You too can acquire that. It just takes a lot of time, commitment and oodles of brain sweat. 5. Great traders sell off in increments. One thing that's particularly stuck with me after observing great traders in action is how they in each individual trade always have a solid game plan by which they stick to. They have preset stop losses which are never questioned or second guessed, and unless it's a stop loss, they rarely if ever sell their entire position in one go. Instead, they sell off in increments of, for example, 25% each. They quickly take some initial profits and while doing so immediately move their stop loss to break even. After the other targets have been hit, the last remaining increment, usually a smaller part, be it 5 to 15%, is left on the market as a free roll, which continues for as long as things go their way. 6. Great traders constantly change their minds. Yeah, another thing that separates the best from the rest is their constant changing of minds.
For Christ's sake, make a move and stick with it, would you?
For great traders change their minds all the time. For whenever the technical map changes, they can go from bullish to bearish to bullish again. This makes perfect sense, because often the market itself doesn't know where it's heading. For if the market itself doesn't know, how are we expected to? By fixing our opinions in trading and sticking with it, we will quickly get punished financially. It is said that the illiterate of the 21st century will not be those who cannot read and write, but those who cannot learn, unlearn and relearn. 7. Great traders have no ego. Great traders don't let their egos come between themselves and their analysis, whereas weak traders make up their minds about something and then stick to it, even if the entire stock is drenched in petrol and set on fire. Mark Douglas once said, although few would admit it, the truth is that the typical trader wants to be right on every single trade. He is desperately trying to create certainty where it just doesn't exist. I've seen this time and again, particularly amongst people who fall in love with their stock or equities, and who'd rather defend it until death do them apart, rather than seeing things for what they really are. These are the people who tirelessly try to fit square pegs into round holes. What they really do, however, is an effort to boost and protect their egos. The underlying asset is just a vehicle to channel any inherent frustration or personally perceived injustices.
Fuck you!
For that reason, the objective truth is typically of low priority. What really matters is to throw a proper punch at the dissidents, the enemy. This cult-like behavior is more common than one may think. You find them on most stocks forums and in any field where people can be shielded by either sheer physical distance or anonymity, however little.
Attention everyone. Let's all give thanks to the leader for this glorious day. The leader is good, the leader is great.
And may death and disease come upon you should you have the nerve to criticize their beloved baby. Great traders don't care if they're right or not. In the realm of moving money around for value, they care only about trading well and making money, whether it means being long or short. For great traders know that square pegs will never fit in round holes. 8. Great traders don't care if they lose. They simply shrug it off. Technically optimal stop losses and tiny positions in relation to their bankrolls prevent them from ever losing much. And when they lose, they immediately look for new opportunities or re-entries. Great traders have made peace with the fact that whenever probabilities are involved, there is always a chance of negative outcomes. They rather trust their trading abilities and that the long term will do the rest. 9. Great traders rush to action when they lose. Whenever they enter a string of losing trades, great traders typically rush to action to get to the bottom of why they've lost. The first thing they do is to decrease their trading frequency and only stick to the highest probability trades for some time. Next, they significantly decrease their bet sizes. Whilst doing this, they backtrack and analyze their charts to figure out whether they had traded poorly or if they were just unlucky victims of variance. As we can see, trading is much more than just drawing proper lines and charts. It's more like driving a car. But just because we're blessed with eyes in our heads and feet to slam the gas pedal with doesn't mean we're automatically good drivers. We also need common sense, spatial awareness of our fellow drivers and the ability to tune in to their traffic rhythm, just to mention a few. The same applies to trading, and anybody who lacks a proper mindset thus faces slim chances of ever becoming a great trader. On a final note, here is a summary of all 9 points discussed in this episode.